Good morning, everyone, and welcome to the Quantum Leap pre-market analysis and trade plan setup for Friday, April the 4th, 2014. For those that are new visiting us here, we are Quantum Leap. We are a self-organized learning environment. We have a private chat room that's been around for over 4 years. We come together and talk about the market, talk about trades, talk about trading ideas, and all kinds of market-related ideas. It is a private venture. It is not a commercial venture. If you're interested in checking it out and joining our room, you can certainly contact me. My name is Doug McKay. I'm the founder and head moderator, and you can send me an email at d.mckay@stealthtrader.com. And each morning we come together in this live go-to go through our market analysis and look at the structure of the market. We do start with a basic routine because we're preparing for our trading day. So we do start with the key numbers and go through the macro to the micro, look at the trend from the macro to the micro, and then we get into some more in-depth chart analysis. If you're watching this on YouTube after the fact, you might want to skip ahead about 15 minutes in until we get into actually setting up our charts and our levels for trading for the day. I tend to be long-winded sometimes. Before we do anything, we have to get the disclaimer out of the way. So this information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to the financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Please do your own due diligence and trade your own trade plan. So I want to start just with a look at yesterday. I mean, obviously, if you were on here, we opened up just basically right at one tick above the range, and we had this 86.50 and we had this 84.50 that was the area that we needed to break higher and low. And of course, Stealth Trader was making fun of me yesterday because of the fact that I was trying to keep everybody safe and wait for one side to take control and a true break above 86.50 to go take out the overnight high at 87.50 and what was the all-time high, or break below the 84.50. And obviously, we just chopped around. I do not apologize for that. We have traders in here that are trading smaller accounts, and they're not able to scalp back and forth with a $1 million account, and we're going to keep our trades at only the highest probability trades so that we keep you safe. And of course, we waited for the break of the news to come out, and then the break of 84.50, and that's obviously we rotated back down to our first target, which was the naked close from the prior day, and then the naked VPOC, and went down and hit our main target below, which is at 1879.50, went down to our trade area, tested the low from the prior day, then rotated all the way back up. Now, our main hypothesis was we were going to bounce off this 84.50, break out of the 86, and go and make new highs. Didn't happen. That's why we have secondary hypotheses, where if we did break inside of value and break below the 84.50, that will rotate back in and test the first LVN and take out the overnight low and the naked VPOC and the naked close. We had a reaction there, rotated back up, and then came back down, kept on testing that level, testing. We talked about double distribution days, testing both sides of the double distribution. We came back down, tested the lower side of the double distribution, came back up to the VWAP, rejected off the VWAP, came down, tried to break below, and then the buyer stepped in and took us up and rotated us back up into the main upper distribution, HVN. It was a classic day of indecision, and the one main hypothesis that we talked about yesterday that we were worried about was that we were going to get stuck in the wicks. And you can clearly see, let me just move this to the back, that we got stuck in the upper wick in the morning, came down, thoroughly auctioned the lower wick, came up and closed inside the upper wick. So you always, whenever you see like we were talking about yesterday morning, you see these big wicks that have not been auctioned properly. You've got to be careful that you're going to get stuck in those wicks, and we did. I still thought that we were going to go up and make new highs. I said that 1887.50 was very weak, and that we'd go and equalize it and take it out. They just need to come down yesterday and pick up buyers with conviction, and we've now on the news came up and closed and made new highs up at that 1892. So I just wanted to go through that so everybody knew why I was being very careful yesterday. It was just not an ideal place to open the market. But we got to get our numbers out of the way, so let's go just take a look at it. So now we've got a new year high, 1892. So we're blowing by this 1887.50. So all these numbers really aren't really going to come into play. I think we test 87.50 again if we haven't already. But we're way above the year open now at 1837.75. So I think the big number above us is 1900, 1900 and 1910. But we'll take a look at it when we get over to the composite. Globex open yesterday going into Thursday was 82.75. We had a Globex high, which was right at the all-time high at 87.50. That was what we were looking to get taken out on the move off the open. If we held that 86.25, we didn't. We got to 87, and then they just chopped around until they finally broke down below that 84.50. Globex low 81.25, and then we opened up one tick outside of range at 86.50. Broke the IB to the one side for a normal variation. We had opening swing at 87 and a low opening swing at 84.50 for 2.5 point. Our IB was 87 high, 82.25 low. Kind of a mixed bag in terms of our intraday numbers. We're still trending up. We had a lower low, but that's what we simply went down and tested that CLVN and the range low from the prior day. And then we had a lower VPOC, but it was only one tick below the prior day's VPOC, so I really discount that. We are still trending up in terms of our intraday numbers. Our 20-day ATRs, whoops, went too far. Our 20-day ATRs are running just under 17 for the RTH, just over 19.25 for the full session, and just under, or right at 9.75 for the Globex. Our value area was lower yesterday. We had a lower value area high at 83.25 and a lower value area low at 78.25. But this news and this pop is kind of blowing things out of the water, and I think we go to the upside. We did have a make and break for the second day in a row. 9:31 Central Time broke the IB to the low side, and then we had basically normal volume. Going over to the daily report, just want to check to make sure that we haven't made new highs. Our high is still 92. So our 20-day ATR targets right now with a full session high at 92, full session low at 83. So we have a full session high target, a 20-day ATR target at 1902.25, and then we have a full session ATR target at 72.75. News today, well, we had the non-farm. That definitely popped us up. And, obviously I didn't see the numbers. Obviously they were good, or, if it's anything like lately, bad is good. We do have the Canadian PMI coming out at 9 o'clock, but I am not anticipating it's going to give us much more of a move than we already had. Just quickly taking a look at the COT report again. Whoops. This is what we were talking about, the fact on Monday and and Tuesday that said this is not looking right. The small specs have now taken a big move to the short side. They didn't get net short, but a big move from the prior COT report from the 18th, and I said they're likely going to rip them and pop this. And we were looking for the pop and looking for that 1890 yesterday, which was our main target above, and we hit it. And now we're testing in new areas. Taking a look at the macro to the micro in terms of the trend, you've got the monthly, good slope, good separation. Price is paralleling the 9 quite nicely, and the trend is very much intact on the monthly. Will it ever end? We do not know. And then we just had this big pop off of the 9 EMA on the weekly, and we're getting even more slope and separation. The trend is very much intact on the weekly. On the daily, well, we're creating this technical gap. I thought we were going to come down and close the gap with this move down yesterday. We didn't quite do it. We've actually widened the gap right here, so I'm still anticipating a little bit of move down at some point in time to close this technical gap. But the trend is intact where we were consolidating. Now we're back into trending, and we're getting slope and separation. We have a new naked cross down here. Write this in on your journal. You've got 1860.25. Not likely to happen today, but that is definitely a target that you should pay attention to once we start rolling over. And just going over to the geometric chart, obviously, I was going to start working the forks and drawing a new fork in here, but we're putting new highs in. In fact, what I want to do, I'm going to take this fork out right here, and I'm going to just take a look at a smaller fork here. Take it from here, here. I haven't drawn this, so I'm not sure if it's even going to give us any reference. Well, see, you're getting this energy point here, even with this fork here. I'm going to move up to test the center line on that. 1926.27. Well, and you got okay frequency here. I'm going to leave this in for the time being because it kind of gives us this reference point, and if we do get a breakdown, you'd be looking at 1866, 1867 area. But right now, what we have to pay attention to and what we've been talking about is coming up and testing the center line and then breaking above the center line. We came back down and tested it. That's on this intermediate fork that we added in a couple weeks ago, and we came down and tested the lower line, or sorry, the center line, and now we've popped up above it and held. So, I don't know if this is in the cards, but a test of the upper line is going to take us up into the mid 1900s or slightly higher. We'll wait and see. I'm a little bit skeptical on whether or not we can continue to go that high without a more significant retrace. I would think that this 1866 is more likely in the cards. So the only thing we can look at right now is coming back and testing the center line is going to bring us into that 1879, 1880 area today. If we get a really a big move up, you could take a look at coming and testing this center line here at 1927, 1928, but I don't think that's in the cards today. So let's just quickly take a look at where we are in the trend coming into the, I think you're going to see that the trend is very much intact. Right now we came down, tested the 20 SMA, and now we've got this trend continuing on, and very strong coming in on the 4-hour. On the 30-minute, you've got a tech gap, Mr. Sneaky, so I'd be thinking in terms of some type of a retracement, on the open, likely to come down and either go sideways and just chop in this upper area, and close the tech gap that way. But definitely something to pay attention to, that we've got a tech gap. But you could actually even look at a tech gap, foobar, Mr. Sneaky. So just keep an eye on that. And then going down to the 5-minute, I know some of you are not going to be familiar for those terms. Those are just terms that I use to reference certain setups. And then you've got a potential flag pattern, setting up here, and I'll take a look at this at a. Let me take a look at it in a 15-minute. Yeah, I wait to start drawing and taking a look at a possible flagpole measured move. I want it to develop a little bit more, but it is something that you could certainly take a look at. Let's just take a quick look at it and see what it could possibly. I don't think it's ready yet. And I'm going to do this really quickly because I don't want to take a lot of time with this. I'm just going to take it to the apex just to give us an idea. So potential move to 1890 650 on this flagpole formation, and you can. A lot of people measure their flagpole measured moves differently. I like to measure from not the breakout or the height of the pole. I like to take a much more conservative and take it from the apex of the flag, and then that gives me a more conservative measured move. But you could actually even take it up to measure the height of the flagpole itself, and then from the breakout, take the distance or the height of the pole and measure the distance from there. But I prefer to do it from here. Anyway, let's go take a look at the composite and see where we are. Somehow my composite disappeared. Where'd you go? There you are. All right, so we broke out of balance around the microcomposite VPOC volume point of control at 6450, and above that 6750 value area high. Came up, accepted value back in this area where we tried to hold it before, and then broke out. So now we had a rotational day yesterday, and they found value here at 8150. They came all the way down, tested this CLVN at 76.75, and then just sort of inventory is net positive overnight. Our VPOC was 8650, so we had a higher VPOC from the RTH session and higher close. We've got a double distribution going here in the Globex with the key line right here at 88. Just writing that down for myself. And of course, the HVN in the upper distribution is 9050, and the HVN and the VPOC in the lower distribution is that 8650. So I'd be looking at this 88. I'd actually use 87 myself as a defining line on whether or not we come down, reject the range, and move higher. And I mean, the big target today has got to be 1900 and possibly 1910. Our 20-day ATR target is 1902.25, and it's really not going to give us much more than, if we rotate back down, look for a move to take out the naked close at 83 and test the value area high there at 83.25, and then you've got this 2-day microcomposite at 8150. So let's take a look at what this looks like and take our Globex numbers and move them over. So currently right now we have a Globex on the pop at 92, and that's likely even to be challenged again, and that we get expansion. So I'll just have to keep an eye on whether or not the overnight high gets larger. And then to the low side, our overnight low is 83. and that's one tick below our value area high, and our overnight VPOC is 8650, and right where our range high was the prior day. All right, so let's get rid of this. Don't need. Oh, I wanted to mark that 88 as an LVN because that's going to be an area that I'm going to be watching. So I'm just going to put that in at the 88. So let me just expand this out a bit more and expand this out. So we're going to open outside of range, outside of value. So, you know, and we're going to have a gap. I just want to take a look at what that gap looks like. So if we open up here around 90, you know, you're basically going to have about an 8-point gap, so half gap fill will bring us back into that 86 range. And I'd be looking for it to come down and to test the if we're going to get a gap fill or a half gap fill, coming back down and testing the range high at 87. But double distribution overnight, you've got 88, and that's why I'm putting my trade area there. So if we break below 88, I want to be short into the test of 87 and the overnight VPOC at 86. So this is going to be my primary target down here. You can call it the 87 on the open. If we open up in this area, obviously, you know, if things change, I'm going to have to make an adjustment. The problem is we've got to prepare ourselves that if we see initiative buyers stepping in, because of the fact anytime you open up outside of range and outside of value, you could get initiative buyers, especially with a larger gap, and just, you know, take us up and rip us to that 1900 area. But we do have a target at what did we say it was, 9650? Sorry about this again. 9650. So I'm going to put a target there at 9650 on the flagpole measured move. And then, of course, my main target above. It's not going to be a extended target today. It's going to be our main target. Is going to be that 1900 centennial number. We're getting close. I don't think that the bulls are going to allow it to not get tested. And then we've got the ATR 20-day target at 1902 and a quarter. And then we've got the rule of 10, and the rule of 10 is going to be my my main target, or my extended target above at 1910. Rule of 10 is pretty simple. Usually when you come up and test a centennial number and break above it, they'll take it 10 points above. Just an observation and something that I've traded, and you'll find that that's something that is a high probability of what's going to happen. So the problem we've got is there's nothing to lean against up here. So there's really, you know, I'm not even going to put any trade areas up here. I mean, I'll put a trade area in, but it's my main target at 1900. I think we'll get a response from 1900, and we'll either break through it very powerfully, or we're going to rotate off of it. But there's nothing that I can lean against up here that's going to give me, you know, an edge. So this is, you know, I hate trading these types of days because, you know, it's brand new territory. There's nothing, you know, what I'm going to rely on most today is you know, the stealth gauges and looking for how the order book is handling and getting stretched out. There's really, you know, and that's the power of using the stealth analytics, because I don't need to know what the structure of the market is. All I need to know is what's going on in the order book. So I'll be putting my stealth up and relying on that in this area, but I'm not going to put any areas that I'd really look to take a trade. The trade is going to be on the open and how we handle this open. And if we come down and we reject this this 88 and a quarter, or come down and reject the 87, then I'll wait for them to break back above the 88. So I'll be looking for responsive buyers down here at 88. That's the LVN from the overnight, the double distribution. And if I'll look, that's where I'll be looking for buyers to step in and see if we get a response there, and then a push up. But if they break through, I'll probably scalp it down to 87, and then I'll be looking for the any type of response here at 87. But I won't, get back long until we get back above that 88 area. If we get back inside and we get below 87, your first target and your main target today is going to be right here in this 83 and a quarter area. You've got the overnight low, you've got the naked close, you've got the value area high. So that is going to be, I'm just going to front run that just slightly and have my main target right here at 83.75. All right, and let me just bring that to the front. And then if we push through, I'd be looking for a push through, take out the naked Deepak at 81 and a quarter, and the 2-day micro composite and most accepted price here at 81.50, and that's going to be my second target, is 81.50. And then if we do get inside of value, you've got to look for that 80% rule to play out and come down and test the lower value down here at 1878 and a quarter, and what was our main target yesterday, which was 1879.50 inside of value. So this will be a trade area and a target, because I'd expect the value area traders to buy the value area low. If we break through, then we've got the 76.75, but it's really going to be the range low and this swing low down here at 75.50. And again, it's a target, but it's also a trade area, because if we break out, we've got some two main targets below. We've got the 71.75, which is just below the CHVN right here, and then you've got the 70.75 as the CLVN, so that will be a trade area down here. And look to take out the 71.75 naked Deepak. That was from, was it Thursday? I'm sorry, it was from Tuesday. And then below that, you've got 65 and 63, and I don't think we're going to get down there today. I think we're either going to rip to test 1900s, or we're going to come down and chop around here as they fight to hold outside of the 2-day microcomposite and the prior day range. But if they get back inside, I think we rotate and we come down and test the 81.50 with a push possibly to test that value area low, maybe the other side of balance, and this key 76.75 CLVN. Below 76.75, then I'm thinking that we could get a bigger retrace and have to come back down into, back in to test the balance area and pick up buyers down here, or maybe the top's in. I don't know, but those are the things that are going to be going through my head as we break below that that 76. I think we'll come back down to 64 one more time and get a bounce off of it. Let's take a look at what that looks like on the Keltner. All right, so a test we're currently trading, you got a nice slope on the Keltner channel. The Keltner center line is 89.25, so that's just just above this this level right here. If we break below that, test to the lower Keltner will take us down to 83 and our main target below. And then if we stay above in the upper Keltner channel, a test to the upper Keltner will take us up to 95.25, but I think it'll be, by the time we get there, closer to this 96.50 and that possible flag pole measured move. So that's what it looks like on the Keltner. Let's take a quick look at gold. And then we do have the break of the flag to the upside right now. Gold has validated the handle and seems to be wanting to make a move. It's trying to close above the daily 9 EMA, and we'll see if we can come up and test this, break back into the 1300s and test the 1311 again. But the main target above right now would be a move up to test this 1323.80. Does this mean that the downward move is done? No. It doesn't mean we can come up and test into the 1300s still and then fail and then come back down and still have this as a valid handle coming all the way down into that 1258 to 1261 area. But if we continue on, and like I keep saying, we break above this right rim, you're going to want to get long gold and try to hold gold for a longer period of time for a measured move all the way up into the 1600s. Let's just take a look at what that looks like on the gold composite. Come on, where are you? There you are. So we're trying to break out of this value that we've been in gold, and we're coming up to test that 1304 level. If you guys remember, that 1304 level we talked about when we were back here, whether we broke above it or and when we came down, whether we held it. Then we talked about it again when we got down here. So it becomes the line in the sand above us, of course. We're testing the 1300 right now. We came up as high as 1303.50, so just below that 1304.6 CLVN, and we're just chopping around trying to hold or break into that 1300. If we fail to get into the 1300 again, look for rotation back to test the value area high of the microcomposite at 1295.10 with the the MC microcomposite VPOC at that 1293 area, and then you've got 1290, and then 1286 is the other side, or sorry, 1288 is the other side of balance. And if we break through that, look for a move down into this distribution point right here and test the value area low at that 1283, 1284 level. Above 1300, look for the test at 1304, and if we break 1304, look for a move to this 1311. It's where we tried to hold before we fell and broke the 1300, and then 1315. Remember, that was the big target when we broke out of that descending wedge. And then you got 1315 and 1320 as the, and I don't think we're going to get any bigger move from that, but if we did, the big number above us right now is up here in the 1333 area. So that's what I'm looking at. Howard, do you have anything for us this morning?
No, not this morning.
Okay, let's just take a quick look, make sure we haven't made new highs. All right, so we've got a VPOC shift now up to 1891. So there seem to be accepting value here. We haven't made a new high. It's still 92. So you've got to watch for a push to even break this 92 even before we've got 10 minutes before the market opens, and they could go in and place a new high. So I'll be watching this, but I'm not going to stay on this today and call the open. I've got some other stuff I've got to get done, but I will be watching this, and I'll make the adjustment and then post the chart just before the open or just after the open with the trade levels and the targets. As always, trade well, trade safe, and we'll catch you on the flip side.